Malaysia delivered a surprise beat on its first quarter GDP, expanding 4.2% on year. That's higher than its advanced estimate. But economists warn the rebound may be short-lived as price pressures threaten to deepen, with the government's plan to cut broad-based subsidies. CNA's Ariffin reports from Kuala Lumpur.
The first quarter GDP results surpassed economists' expectations over 3.9% growth. The higher growth was driven by increased household spending and a recovery in exports due to higher external demand. Bank Negara says exports in Q1 rose 2.2% on an annual basis in the first quarter of the year. This after 3 consecutive quarters of contractions. Improvements in the labour market as well as higher tourist arrivals also accelerated economic growth. The services sector, which accounts for more than half of the country's economic output, expanded at 4.7%, while manufacturing activity rose by 1.7%. The central bank expects the strong growth momentum to continue.
For 2024, growth is projected to improve to between 4% and 5%, anchored by sustained expansion of domestic demand and improvement in external demand.
Bank Negara says headline inflation is expected to remain moderate this year between 2 and 3.5%, broadly reflecting stabilizing demand and contained cost pressures. The inflation outlook is subject to some potential upside that could arise from the implementation of the fuel subsidy cuts. Afifah, Ariffin, CNA, Kuala Lumpur.